I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Randy Smith. Randy is the founder of Impact Equity, which was formed to help investors achieve strong results in their passive real estate investing strategies. Randy's main responsibilities include introducing and assisting investors with investment opportunities offered by various real estate investment firms. So first, Randy, let me say thank you so much for coming and taking the time out to be on the show today.
Yeah, thanks so much for having me, Jason. I really appreciate it.
Absolutely. I'm looking forward to this. Let's start and just sort of give the listeners your background. Tell us where you came from, how you got into real estate, all of that, and then we'll dive in.
Yeah, definitely. So yeah, I am a recently retired, and I'll say air quotes retired. I got laid off again. Corporate America sales guy after 25 years. I worked for a couple of very large organizations, Fortune 100, Fortune 200 companies. Was really blessed to work with amazing people and amazing organizations, and ended up about 5 or 6 years ago. I got the real estate itch, so I started investing in single families, and then found very quickly that that was not something that I wanted to scale or do full time. So I moved over into the passive investing space, and as luck would have it, when I got laid off last May, a large portion of my monthly household expenses were covered by passive income. So I got to really kind of pick and choose what it was that I was going to do for the next phase of my life, which as I'm finding today, kind of my superpower is vetting and uncovering good opportunities in the passive investing space, and then helping other people do the same thing.
Yeah, that's great. And so I know you mentioned that you got laid off. Obviously, that's a challenging situation, but a couple of things I wanted to sort of just focus on there. One is I think this is a big part of why those of us in the space get sort of so passionate about it, because it's building your passive income streams is going to help you so that if someday something goes wrong, you've got a cushion, you've got that fallback. And so you had realized that, so that with enough time that basically you as you said, you had passive income to cover once you were laid off. So it's not good that you got laid off, but you were sort of in that position of covering those expenses via passive income. So it wasn't like that was 30. It didn't take you 30 years to get to that, right? You said
Right.
You had been doing it for 4 or 5 years, and so it's an important thing, I think, for the listener to take home with that is, like, when we talk about these opportunities and that you see real estate investors getting all hyped up about it, the reason is likely because we've experienced it within our own lives and seen, hey, some event happened, something came up, and we either realized the importance of having this passive income and pivoted, or like yourself, you had already sort of found it and were working towards that, so that when an unexpected life event did happen, you were already prepared. So I just think it's something that really important or worthwhile to point out there. So thanks for sharing the story. And so now what you're doing at this point is, are you working in a fund model? Is that kind of how you're operating? Tell us a little bit about your business model.
Yeah, so it's an interesting story. I found, I think probably my third passive investment was with a local operator here in Phoenix, Arizona, and he just happens to be one of the biggest, and I'm probably a little partial, but I think he's one of the best operators in the country in apartment Class C, Class B value add. And over the last couple of years, I had invested in I think at the time I was in 6 or 7, maybe even 8 deals with him because I had grown to be just a very big fan of him and the organization, and I had been following him for years. So I have a lot of faith in him. So much so that I have about 25% of my net worth tied up with this one operator. So I'm a big fan. Um, because of that, I had actually referred quite a number of different investors to him because I was telling everybody I knew how excited I was about what I was doing in this passive income base space. And I didn't really have any intention of becoming an operator or a capital raiser or whatever the terms are that are out there. I was genuinely excited about what I was doing. So when I got laid off, he and I reconnected, and ultimately I had been bringing investors to him already. So we just formalized it. And I'm doing that officially now for a handful of his deals. And yes, I do leverage a couple of different strategies because I have 2 different partners that I bring investors to, leveraging a fund to fund model.
Mm-hmm.
And then I have one operator that I work with that I actually get to be a portion of their business and own a portion of their business by bringing investors to their group. So there's a number of different ways you could structure it, but essentially I am getting to be a part of that process, and I get to benefit from that as well when we provide excellent returns for our investors.
Sure. So I want to maybe clarify that, because I think it's an interesting thing for people to understand the difference in those structures between the fund of fund models versus, I'm assuming you're saying like a co-GP situation.
That's correct.
In the other. Okay. So yep. Do you want to kind of clarify that, define that for people so they understand what the difference, if someone's looking to be in potentially in the capital raising space, there are a couple of different ways to do it. So maybe speak to that. I think it'll be a good thing for people to get an idea of what it could look like for them.
Yeah, absolutely. And it's a very important distinction because according to the SEC, you technically cannot be paid for just simply raising capital. As an individual, you can't. So in the fund to fund model, I specifically do, and I'm not even sure what the official term is, but I call it single asset fund to fund, where my partner identifies an opportunity. He comes to me and says, Randy, do you think your investors might like this? And if so, how much? I tell him a ballpark, what I think I might be able to bring to the table. And then I launch this opportunity to my investors who I already have a pre-existing relationship with over, the many years in corporate America, or friends or family, whatever that might be, right? Now, since I am bringing a bigger dollar to the table, my fund actually gets better returns than what the traditional retail investor will get. So as an example, if the traditional retail investor is getting a 7-pref 70-30, my fund could earn an 8-pref 80-20 as an example. And those are terms we can dig into if that's necessary. But the bottom line is I get better terms, and I give the majority of that to my investors, and I keep the difference essentially. Okay. Yep. So the investors are actually investing in my fund, which is designated to invest in the operator's fund.
Yeah. And you're doing it that way, just to, I guess you touched on this, but maybe just to spell it out very simply, is that your investors can get a better return investing via your fund than they would if they invested directly in that deal. That's the advantage for them, in the sense that because you're pooling capital within your fund, now you can bring that to this deal, and that's what allows you to get those better returns. Whereas if they're going to put if they're going to put 50,000 in your fund or 50,000 in the actual deal via that, it just changes. It's that, I guess, pooling of capital power that really makes it effective that way.
Yeah, and so there's a number of different ways that I'm bringing value to the table outside of that as well. Yeah. Where I like to think that my expertise and my superpower now is vetting and finding good deals. Mm-hmm. So I am only putting deals in front of my investors that I've personally vetted. I've likely walked these properties. I've seen the financials. I have a much better idea than really the person I work with most is the guy who's doing his first, second, maybe third investment in this space. So
Yeah.
they're getting to take advantage of my knowledge and my experience and my relationships and get access to deals that they wouldn't normally have access to without a relationship with me. So
Right.
number of different things that I'm bringing. Um, I'm also bringing like diversification to them where I have multiple operators that I work with and vet, and I'm bringing diversification across asset class, operator, market, and deal. So diversification across many different channels.
Yeah. Yeah, absolutely. And then contrast that, I guess, with being co-GP. How is that different for you and maybe also for your investors?
Yeah, so as a co-GP, I actually am part of the operating entity. People are no longer investing in me; they're actually investing in my partner's entity. I get a percent ownership in that deal, and I do actually have responsibilities outside of bringing investor capital to the table. So, of course, I've got to deal with and do investor relations. I usually have some type of asset management requirements. I'm likely involved in regular communication in asset management decisions, working with property managers, walking the properties, doing due diligence, checking on comps, all kinds of different things. I actually get my hands dirty a little bit more, which I like.
Yeah.
And then I also get to peek behind the curtains a little bit more and see what's really going on with the business as well.
Yeah. Yeah. And it's an interesting, I think that's one of the coolest things about real estate is like there's so many ways to do it. There's so many ways to be involved. And even as you you yourself can find several different ways to be involved and be an important part of deals, and that does allow your investors to have that level of diversification where it's whether they're in the fund or they're in this particular deal as part of where you're the co-GP. It's just nice that there are so many ways to do it, and then as long as you can stay within and be aware of those SEC regulations, it just opens up the door for a lot of people in your network and things like that. When you're I know we spoke before, and you're pretty focused in drivable markets, right?
Or short flight. Short
Yeah,
flight
short
is
flight.
what I
Okay,
say. Yeah.
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 So short flight away, something close to you, and talk about your reasoning behind that, because I've heard people have sort of strong opinions both ways. Like,
Sure.
if it's not in my, if it's not in my city, what does it matter? But then other people feel very strongly about being within close range of the asset. So I'm just interested in sort of your take on that.
Yeah. Well, and it's funny because you and I both have some experience with Atlanta, and we're both pretty close to the West Coast. I'm actually in Phoenix. I believe you're in Los Angeles, right?
Right.
And I own some properties in Atlanta, and that was, I don't remember, it's this 3.5, 4 hour flight. You add a couple of hours on the front end, back end, commute time, all that other stuff. Like it's a half a day from the time I decide to leave my house until I'm landing in Atlanta. And I'm just a guy that likes to get my eyes on my investments. And I think a lot of times decks and presentations have the best pictures at the best time of day with the perfect lighting and the sunny skies. And, let's make sure everybody's like all the riffraff is not hanging around and all that other stuff. So I like cruising by my properties at 7 o'clock at night to see what's going on there. I want to show up on a Sunday and see what a Sunday afternoon looks like. I want to drop in and say hello to the property manager and see if they're smiling, and are they even there? Quite frankly, a lot of times I've had some situations where you go and nobody's even there. And there's nothing better than walking around a property and just casually talking to a couple of the employees or a couple of the tenants to really know what's going on at those assets, right? So personally, I want to be able to hop on a plane, or drive down kind of unannounced. Not that I'm like spying on anybody, but I like to see how normal operations are going on with
Sure.
my investments and my investors' investments. And too much longer than a 2 hour flight makes it not, for me, not able to do like a turnaround day trip. Um, I don't quite have the stamina that you do the the late night flights
Oh, I
out
know.
and
I don't
all of that
enjoy
kind of
it. I
stuff.
can assure you, I don't enjoy it. It's
Oh,
it's just
I
a
can't
necessary
imagine.
evil. Yeah.
Yeah, I think in my late 20s, early 30s, I would have loved that. But I turned 50 last year. Like, I like to get up and get to the airport around 9 and be back by about 6 and have my business done.
Yeah.
So it really just is. I like to be there more often. That's it.
I get it. I totally understand that that perspective, and yeah, I don't enjoy those red eyes, but for me, there were other reasons to, and still are, reasons to be in Atlanta. I do love the market. There's lots of other good markets,
I love
but
Atlanta as well. I
yeah,
absolutely do. Yeah, and
it's a
it's a fun place to go visit too.
right.
Yeah,
It is. Yeah. But I totally understand what you're getting at. It's not. I've done it in a day. It's not an enjoyable day. It's
yeah.
a long time, a lot of very little sleep and a lot of time on a plane. So yeah, it's a challenging thing, but I get that. So as you grow your, I guess maybe before I ask that question, kind of what's your vision? How do you kind of see your business growth going over the next 3-5 years?
Sure, sure. And this is very early stage, first time entrepreneur experience. So when I started this business, my dream and goal was to be able to put a deal a month in front of my investors and give them diversification across asset classes, operators, markets, and then deals. So that was kind of the overarching goal of what I was trying to do, and ultimately help the first time passive investor take that plunge and invest in their very first deal. So that is why impact equity was born. Fast forward 8 months or so, and I've now helped, call it 60 investors at this point, and we've invested about $4 million. So my overarching goal right now is I'm trying to bring in $2 million a month, and the overall goal is to help 1,000 people with their first, second, and third investments. And if you start thinking about the gravity of taking even just $1 million, if you're able to double $1 million in 2 to 5 or 6 or even 7 years,
Mhm.
the impact that has on the individual investor is significant. And if you start thinking about folks that are able to do 25, 50, 100 grand once a year, or even once every other year, like that can be a retirement plan that creates a livable income, like long before people with the handcuffs of the 401ks and the IRAs will ever get to even touch those dollars. So,
Yeah.
If we can open up and help people see the benefits of passive investing in real estate earlier, it gives people the option to become work optional, or like ultimately decreasing their dependence on their W-2 and the stock market. So I don't know. I think it's a really big deal, and I think we can help a lot of people by doing it. So
Yeah. Yeah, I couldn't agree more. I think it's, um, as you mentioned, there's that, sort of, people use that sort of doubling of the equity every 5 years is a rough guesstimate, but it's, if the
sure.
market's really good, it might be 2 or 3 years. If it's a little bit of a slower time, it might be 7. But the reality is that's kind of the cycle that's happening. And so the earlier you get involved in that, and if you can put a chunk of money in each year, and that's doubling, as you go along. And so now you're in this, we're in this type of, I guess, what do you call it? Snowball effect, I guess it would
Sure.
be,
Sure.
where
Yeah.
it's just, doubling, each one is doubling, and you've got it going. So as you exit those, you reinvest, you have all of those kind of different opportunities happening at once, and it's just going to grow. So it's a pretty cool snowball to create. And I think I agree with you. It's like very, very passionate about getting that out to people. I think the other thing is, one of the you mentioned the stock market. The thing when I started to really dig in on real estate, people try to compare stock market to real estate all the time. It's a very common thing, like which one's better. And if you look at the returns, even if you were to say that the returns on an annual basis are exactly the same, even if that were true, the reality is that you've still, to use the money from the stock market, you have to then sell those stocks. Whereas if you can get your money invested in cash flowing real estate, that's just continuing to grow. The basis is continuing to grow. So it's, to me, it's not even really comparable, I guess, as far you can look at what that, sort of cash on cash, but unless you're investing exclusively in dividend stocks, which you've got to have a lot of them to be getting, significant cash flow off of them, it's an entirely different vehicle. So I think it's not a apples to apples comparison, I guess.
Not all, and that doesn't even factor in all of the tax benefits that you get from real estate as well, which some could argue are even more important than the returns that you get in real estate, quite frankly.
Yeah.
So
yeah, it's valid. It's a very valid point. I think, and there are people that invest in real estate that is their primary goal, is just that the tax benefits are so substantial that's what they're trying to get out of it. Great, you get some cash flow too, but really they're looking for those losses against, whatever their other investments are, or their, W-2, if they're able to apply those losses. It's a very powerful vehicle. I'll ask you to put on open up your crystal ball.
Oh, good.
What do you see? It's an interesting time, and I've been asking people lately because I'm just really curious what everybody else thinks about, sort of where do you see the market going this year, maybe 2023, 2024? What are your thoughts on how things are going to go?
So had you asked me a week ago, or let's call it 10 days ago, before all of the stuff with the banking going on, I thought I had a pretty good idea on what was going to go on. I thought we were going to see interest. Maybe we'd see one, maybe two more interest rate hikes, is what I thought at the time. I was cautiously optimistic that maybe on this next announcement next week that there would not be an increase, but I wasn't brave enough to say that just yet. But I think we're going to see interest rates start to level off, middle of the year towards, Q4. And then we've got hopefully this 6-month window where we'll see them stabilize. As if history repeats itself, we'll see them stabilize for 6 months or so. And then hopefully, which puts us about a year from now, we might see a rate drop slightly, right? So I've been hearing this thing survive until 25. I think really what the goal here is, try to get through this year. And I think you'll be in a position where you can actually start to see cap rates start to compress again. And then that's going to create just a storm of activity that folks that have the infrastructure and have the business and have the good business sense will be able to step in and hopefully really help a lot of people and help themselves as well.
I think that the interesting thing is, I guess you can't predict 100%, but as you said, like history says, there are market cycles, right? And so the rates go up, then they're going to level off, then they're going to go back down. What I think is going to be hard is really hard to predict, and it's so far it's been so outside of what I would have thought would happen, that it's like I'm not an economist. I wouldn't have tried to predict before, but I'm just like, they can't possibly destroy the entire economy by raising rates. Oh wait, they are doing that. So it's kind of like now I feel like any of the common sense that might have come with it is out the window. But it's the time frame of how this is going to go is probably the most intriguing part. And it's so in the meantime, my wonder, as you said, survive until 25. My wonder is this truly going to create a bunch of buying opportunities, which some people are speaking to it that way, or is it going to be something that more people than not are sort of set up to just hang on until until things get better again. And you obviously, you don't want to have to sell right now. Like that's
Right.
no secret. But some people are going to have to. So we'll see what happens.
But but I also think they're the doom and gloomers out there think that all of this bridge rate or this bridge loans are going to come due. People aren't going to be able to refinance, and then they're going to dump the market. Um, I don't think personally, I don't think that's going to happen. I think that there are opportunistic lenders out there that are going to step in and offer some type of additional financing to those folks,
Yeah.
albeit at a higher rate, I'm sure. And that, those folks will take advantage of that opportunity, but it will protect the investors and it'll protect the investors or the operators that didn't have the wherewithal to buy those rate caps early on, or have the rate caps or the reserves to potentially buy those again. So I'm not of the doom and gloom mindset. I'm a glasses half full type of guy. And I think I think even in today's market, there are plenty of good opportunities out there. Everybody tells me that they can't find deals. And yet I have got more deals on my plate right now than I have ever had. So, I think the big players, the smart players, are finding the opportunities and they're going to continue to put those in front of their investors. And I like kind of the dollar cost averaging strategy as a passive investor, where find the needle in the haystack and continue to invest throughout the cycle. And I think that's a better strategy than trying to sit on the side and try to time whenever the
Yeah.
most opportune time is to buy or to sell or whatever that is. So
Yeah. And I mean, you could argue that what people argue what the most opportune time to buy or sell is. Like we had a year and a half ago, the market was so hot, some people didn't want to buy. And now the market's down and people don't want to buy, other people don't want to buy it. It's just like
exactly. Yeah.
this constant, if you are looking at it from that sort of negative light, it's never a good time. But the reality is that that's the beauty of real estate is time, right? So you're not buying it to sort of exit it in 3 months. You're buying it. It's probably a bad time to flip right now, but it's still a good time to have sort of long-term holds. So
Of course.
it's definitely something that people need to be aware that of if they're not all real estate is created equal, not all investing strategies are created equal. And so investing with someone that they trust, like yourself, and you're doing sort of the vetting of those deals for them, that's a really nice structure to have.
Yeah.
Randy, let me switch gears. I want to get to ask you the questions I ask every guest. The first one is based on the name of the show being Know Your Why. And so I always ask every guest, what is your why? What drives you? It sounds like you were fairly financially free, even with this layoff. So what's driving you at this point to kind of continue? I know you talked a little bit about, having this 1,000 investors and everything. So it sounds like you've got some significant goals.
Yeah. So it's interesting you say that too, because yes, I think my wife and I talk about this. Like we could kind of sit back and kind of cool off and just ride this thing out. Essentially, we'd probably be just fine if we did that. And yet, I'm probably working harder now than I've ever worked in my entire life. Which is an interesting thing because I met with entrepreneurs for 10 years in my last job, and I was always baffled, like, why do they work so many hours? Like, quite frankly, I'm making more money than most of these guys, and yet they're blood, sweat, and tears. Anyways, I now understand, right, what it's like to be an entrepreneur and put everything you got into it. And I think like the easy answer is family. The easy answer is helping those that I love the most. But I will say, like, at the core, like, my why is, and it sounds a little selfish, but I like to be an expert and I like to help people with what it is that I'm good at. And if I'm giving value and I'm helping people, that's when I feel flow state more than anything in the world, is being able to add value and truly help people. So that's kind of the why, and that's kind of why Impact Equity was formed, is that I'm going to continue passive investing, and if I can help other people do the same thing, that's what I want to do. It's really cool to walk out and give my wife a high five because we had a deal go full cycle. But for those that I know, like, and trust, and the people that I love the most, if I'm able to help them do the same thing, like, that's a big, big deal to me. Um, and through our success, we've been able to help our family in a way that, I mean, it's been transformational, the type of things that we've been able to do for our family because of the success that we've had. And I just want to do that more and more and more, quite frankly.
Yeah. Yeah. I love that. I think that, yes, you know, some people, I ask that question of every guest. Some people, I've heard people sort of say that they think it's a stupid question. It's fine. Everybody entitled to their opinion. But I think that because they think everyone says my family, but there's more to it than that. Like part of my why is my family, but that's very surface level, and that is the sort of easy answer to say. But yeah, to some degree, if you're an entrepreneur, some of this is, I think, for all of us, just that inner drive to be successful and excel at something else. Like, you master one thing, you want to master another thing. So it's like,
Yep.
you kind of get to that point where you're just looking for something that will push you in your own personal growth, and finding something that then impacts others that does both. I mean, there's nothing wrong with that. Like,
Yeah.
I guess it's a good kind of selfish that leads to helping others. That's
Yeah.
kind of hard to be upset about that.
Well, and it's kind of interesting. I have a little bit of a rich dad, poor dad story in my background, where my dad worked for LA County Sheriff's Department for 35 years and bought apartments. My mom and stepdad were entrepreneurs and worked their fingers to the bone for 20 years and sold the business for a loss after they were done with it. And I made some terrible mistakes financially as a younger person, and that becomes a weight that holds you down from truly becoming the man or the woman or whatever it is um, that I would think that, call it a higher power, whatever you want to call it. But if you're carrying this monkey around on your back, you cannot become the man that you're meant to be. And if you can take financial insecurity off the table and just kind of check that box, then you can truly show up and be 100% of yourself, which we see, and I talk about this a lot. Like, I spent most of my life being a vanilla version of myself because I was so afraid I was going to offend people or not be liked or whatever it is. But I can truly show up and be 100% me and love the person that I am, because I am not a slave to all this other stuff that used to completely be my master. So it's going off maybe on a little bit of a spiritual tangent, but um, that is the true reason. So
Yeah. It's I don't know that I don't think I fully grasped this until I left my W-2 job, which, by the way, like, doing something I love to do. It's not, it wasn't like,
yeah,
I got to escape this terrible job or something like that. But once you do become, sort of completely in control of your own time, it is really very sort of life changing, and yeah, probably spiritual to some extent. Just like, wait a minute, this now I can really do what I want to do. I can really
right.
sort of make that. But so your life, so many of us, life is structured for so long, right? It's like
Mhm.
school, and then high school, college, job. Like, you have to be at this certain place, these certain hours, and then that structure goes away, and there's a little bit of a, I don't know, figuring it out, finding yourself, whatever you want to call
Sure.
it, in there. Like, well, now I have to structure it, so there's a challenge to it. But yeah, once you kind of get in that groove and feel comfortable with it, it's pretty amazing.
No, I agree 100%.
Um, Next question for you, Randy. Tell us something about yourself that isn't common knowledge, special skill, a hobby, anything that you're comfortable sharing that would let people get to know you better.
Interesting. Okay. Boy. Well, I'll tell kind of an easy one, but there's kind of a lesson to it as well. Like, I I was involved in sports kind of in high school. I was never like an achiever at all. I probably um, kind of fell off of that wagon after high school and did not stay in great shape and do all of those types of things. And I think about 10 years or so ago, I started running and then started doing some races. And of course, I am kind of a anything worth doing is worth doing in excess type of guy. So,
Yeah.
I started doing races and half marathons and marathons, and then I found triathlon. And this whole time I've always kind of like joked, like I'm kind of the chubby, fat old guy. Like I'm not really an athlete, but I made a decision that I was going to do an Ironman, which is quite frankly, when I was first looking at it, like I would watch all these videos about it and I would tear up. There was something in that really just moved me emotionally. So I made the decision to do it, and I trained and I got a coach, and I made it across the finish line at 13 hours and some odd minutes or what have you. And when I woke up the next day, like I truly felt like I can absolutely accomplish anything if I put my mind to it and I allow myself the grace to stub my toes and make mistakes. But like it was an amazing experience to do that. And I'm still kind of like the chubby fat old guy. But I'm the chubby fat old guy that did an Ironman, has done multiple marathons, and
Yeah.
like it was a life-changing experience to go through that. So yeah, it was a lot of fun.
Yeah. Fantastic. Well, great job. Great job. Finish. I have not done an Ironman. I've done some sprint triathlons, but I'm not a strong swimmer, so it makes me nervous to be like, yeah, I'm going to swim 2 miles.
And people die on the swim of all
Right.
of all things,
Right.
Yeah,
That's
absolutely.
the
Yeah.
part that like actually makes me very nervous about doing one. But
Sure.
I think
Yeah.
I mean it is incredibly powerful, and um like you said, I I did some marathon training. I ran some marathons because mostly in large part because I'm originally from Boston, and I wasn't a distance runner. I grew up always doing like I played soccer, I did track, but it was always short distance stuff, right? Like I was
Yeah.
a sprinter and a jumper. And so, but when you when you get to be that old guy, you can't compete. There's no competition. There's not like a long jump competition for 45-year-old. That's not a thing. So it's
Yeah.
like, okay, what can I do to sort of maintain that component of my life, like being athletic and whatever. And so for a while it was I went sort of went to running and distance running and did some marathons, and I eventually did Boston. But
Did you
like,
really? Good for
yeah,
you.
I mean,
Yeah.
it was it's a funny story. I did Boston on the hottest day in the history of the Boston Marathon. So
Awesome.
it was like, because Boston Marathon, people don't know, is usually in April, like early April,
Yeah.
and in Boston it's like you're lucky if it's 60 degrees. It was in the 90s. So
Yeah.
I had been running at my best. I was running like under 4 hours. Like I thought I might actually be able to qualify for the following year's Boston Marathon by running. I ran it through charity. It was so hot. I started getting cramps after like 9 miles. It was the worst thing. Like it was the most amazing and also worst experience, just because it was so,
Yeah.
I could run a little bit and then everything would cramp up. My legs felt terrible and I'd have to like hobble along until the cramps went away. But there was no way I was ducking out of that race. I was like,
Yeah.
this is
That's
my
awesome.
home. I am seeing this whole thing. So yeah, it's a pretty cool um place. And as you said, like you got, when you finished an Ironman, like that's just an amazing feeling. So good for you. And
Yeah.
congratulations on that. When people hear this and they want to reach out, what's the best way?
Yeah, and kind of the way you and I met, I spend a lot of time on LinkedIn. It is my primary communication source. So LinkedIn, Randy Smith or Randall Smith. But of course, you can go to impactequity.net, or I've got a podcast called The Gentle Art of Crushing It, where I do a Thursday episode completely focused on educating and inspiring the passive investor. So really, any of those three areas are a great way to find me.
Awesome. And we'll put all that in the show notes.
Awesome.
My final question for you, Randy, what would you tell someone who is a piece of advice for them getting started in real estate? They're looking to, whether it's passive or active, what would you kind of tell them is the best way to get going?
Yeah. So regardless what you do, um, I would say set a date and start, period. Like that's it. If if you don't have your financial house in order, your goal should be get your financial house in order. And if your house is in good financial order, then pick a date, invest in a deal within the next 30 days. There's no reason you shouldn't do it.
Yeah. I like the pick a date part. People, there's a lot of just get started kind of, and that's out there, right? You see it on social media. but yeah, picking an actual date that,
Mhm.
so because it's easy to kind of continue to think I'm going to start when this happens or but yeah, you pick a date and just make it happen. So I love that. Listen, this was awesome. Thank you so much for
Yeah.
coming on the show. I really appreciate it. I really appreciate you taking out the time and coming to share your story with us.
Awesome. Thanks so much, Jason. It was a pleasure.
Yeah, absolutely. Folks, I know you're going to love this episode. Please like, rate, and review so that we can get more great guests like Randy. Have a great day. I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Balara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.